Hey everybody, this is Jeff Nelson. I'm a realtor with IXL Real Estate Eastern Shore, and we are in Daphne this morning. Gorgeous day. What is October 30th is today?
Yes, indeed.
All right, so we've done a bunch of these now, and this is,
Dan Henry.
he's with Advanced Mortgage. We've done a bunch of these videos. I don't know how many, it's a bunch. And we're doing weekly updates on mortgage rates, as well as Dan is giving some of his expertise every week on various topics that apply to the mortgage business that would help you. So today we're going to talk about what we're going to get into.
Sure, and thank you, Jeff. It is a beautiful day, by the way. But what I'd like to talk about today is some mistakes people make when they decide to buy a house and when they get into the process. One of them I see, it's not too frequently, but I do see it, and sometimes it comes back to bite them in the rear end, is not doing an inspection on the home. Just assuming everything's going to be okay, and then down the road to find out there's things like plumbing issues, even leaky roofs, things like that. Doing an inspection, in my opinion, is something that absolutely should be done on every home purchase. It's going to be normally one of the biggest financial decisions you make to buy a house. And it can also lead to a lower price if you find things that you didn't know were there. Might need a new roof, it might need new plumbing, it might need some certain things that you could go back and negotiate the price, or it may decide not to buy the house at all. Other things like doing a termite inspection, most cases they're in the purchase contract, but there's some loans that are available that you don't have to do a termite inspection. You know, I highly recommend doing that as well, especially in this area for obvious reasons. So your thoughts on that, Jeff?
Yeah, I was actually thinking, Dan's been in the mortgage business for over 21 years. I've been a realtor for over 18. And so we come across just about every scenario doing it for this long a time. But I was thinking that some people, actually I've run across quite a few people over the years that actually can qualify for more house than they want to pay for. And so what's the danger of that? I mean,
well, that's a really good point. You know, I come across that all the time. You know, people have asked me what they can qualify for. They make a certain amount of money. They have so many debts, and let's just use $500,000 loan amount for an example. I get them to qualify for. That would be the maximum in some cases. Doesn't mean they need to go out and buy a $500,000 house, because their lifestyle may not warrant that type of a purchase. Certain cases people will buy more house than they should, even though they qualify for it on paper. It will completely change their lifestyle if they buy too much house. So it's really good to, speak with your spouse, speak with your loan officer, look at all the options before you decide on the amount of a home that you want to purchase.
Awesome. One other thing that I've ran across this one time not too long ago, and that's if making a big purchase during the mortgage process. I remember one time I sold a condo to a lady, and it wasn't one of those big $700,000, $800,000. It was like a $250,000 condo that she was going to live in it. It wasn't going to be, for investment purposes. And so she just qualified for it, so far as she didn't have a ton of money to put down. Her income made it so that it was comfortable. But anyway, I found out that during like 2 weeks before closing, she went out and got a timeshare.
Oh, wow.
And I was like, no. But anyway, it turned out okay. But do you see that a lot?
We see it sometimes, and today the technology the underwriters have, they use something called Data Verify, and they can see everything that goes on, even if it's like when we look at your credit, look at your income, get you pre-qualified. That's what we can do. It's, I'll tell anybody, it's not something you want to do, is make any kind of purchase until the loan is signed, sealed, and delivered. And I've had people go out and buy a $1,000 piece of furniture and put it on credit, and we'll blow the deal out of the water. When you're pre-qualified, it might be, that your debt ratio is tight. It might not be, but it could definitely affect it. So, making purchases during the loan process, a big no-no. If it's something that has to be done, discuss it with your loan officer and make sure it's not going to ruin the deal, because there's a lot of factors that go into these pre-qualifications. So excellent subject.
Awesome. Yeah, it is this is a great topic, and we probably could do a part 2 on this, or
Yes.
and part 3. But if you're looking to get a mortgage, you want to buy a home or condo here in Baldwin County, Dan is the guy. He's got a wealth of information, wealth of knowledge. Been doing this a long time, and he's just a good guy to work with.
Most people's out there with our interest rates and fees.
That's right. And on that note, here are our rates. These are national rates. So 30-year fixed rate is 7.88. 15-year fixed is 7.24. A 30-year jumbo is 8.01. 30-year FHA is 7.32. And a 30-year VA is 7.33. So that's our week's update, and we will be here next week with another one.
Good deal.
All right, we'll talk to you soon.
Bye.
Bye.